The U.S. lowers China tariffs. Bye, bye, bye. Bye, bye, bye. Bye, bye, bye. Everything is right in the world again. Yay! Not so fast. I'm going to give you a little market update here. We've got this gigantic 180-point rally in the S&P 500. The very first bar of the day, long, red, heavy volume. Uh-oh, instantly, sellers have come into the marketplace. They see this as an opportunity. I'm not talking about small retail traders. Longer-term institutional money that's been trying to reduce risk is going to see this as an opportunity to reduce risk right here, right now on this news. So what happened? So we had Besant go to Switzerland and start negotiations with China. The tariffs were at 145% last week. Trump said that 80%, that seems like a fair number. Well, this morning we find out that the tariffs have been lowered to the 10% base, plus a very important 20% punitive charge for China not controlling fentanyl into the U.S. So 30% tariffs, that's a base that's going to remain for 90 days. The reciprocal tariffs are going to be negotiated over that time period. 30% is still a huge tariff. And I suspect that Trump is probably being advised to take it a little easy on China because their economy is falling apart. Don't take my word for it. Please don't do that. Go do your own research. And you're going to find out that municipal employees in China haven't been paid for many months. And this is widespread. This is across the entire country. You're going to find that factories are closed. Workers haven't been paid for many months. There's some riots there. We're starting to see escalating credit concerns. I've heard that there was a government report, government report from China, which that information's very guarded and it's often misleading. They're showing a huge spike in non-performing loans and a huge spike in write-downs year over year. So they're in dire straits. It's not going to be good for the United States or the rest of the world if China goes into a full-blown credit crisis. And I believe they are on the verge of one. This is the second largest economy in the world. So even if tariffs hadn't happened anywhere, Europe, China, Japan, Korea, no tariffs anywhere, I still believe that the market would have been in bad shape going into this year and that we would have seen a gradual drift lower as economic conditions deteriorate. The tariffs simply got us there a little bit faster. And all of that bad news is coming. And what the tariffs did was they pushed all the demand forward. Companies tried to front run the tariffs, so they bought a bunch of inventory, had it imported, and now that supply has to be worked off. That means that right here and right now, production levels are going to drop. And we're going to see that bear out in the numbers that come out over the course of the next month, 2 months, 3 months. Yeah, Pete, you're bearish and you're just sticking to your guns and you're inflexible and you're not watching what the price action is telling us. So we're going to take a look at the price action in just a minute. So I do have a short position on right now, and I shorted BBY at 74.02. You can see how it's been steadily declining. Why did I pick this one? Well, because when the market was muddling around in here, even when the market got above VWAP, this stock was ticking lower. So we'll keep an eye on it. This is only a day trade. It's a little bit unusual for me to take a trade like this because it doesn't conform to what I would normally be trading. You can see that we do have some upside impetus here, but the stock did hit major resistance, almost got to the 100-day moving average, and it was repelled instantly. So some of this gap is going to fill, and I felt that if the market is going to start filling in some of this gap as well, the stock has already shown me steady pricing pressure, and it's going to continue to slip and slip as the market comes in. So I already have a stop in at my entry price, I'll probably be looking somewhere. Gosh, if I could make a couple dollars on this trade, 72.02 looks good. So what I'm going to do is, while I'm doing this, I'm going to set an alert at 72.02 just so that I can keep an eye on it without having to hawk the position. So price less than 72.02. Let's buy that puppy back in. Now the alert is set. You should be using alerts all the time. So what's happened here? We had a long red candle down to a new low of the day. The market's been bouncing. What's the most likely pattern here? Well, there is some good news in that tariffs are not going to be as high as everyone had feared. There's good news that there are trade deals that are currently being negotiated. And so what I see here is a downward sloping trading channel. Connect the highs, connect the lows, and I believe that this is going to be a stubborn pullback. Typically, if that trading channel is shallow, you'll get a pullback, let's say to the 576 level, and then you'll get an acceleration to the downside with a breach of this lower trend line, and that usually is going to signal that that is a selling climax and that the market will bounce and that you'll find support somewhere in the middle of the gap. So that's kind of what I'm looking for, but who's to say that the selling pressure can't all of a sudden accelerate and go down? We don't really know. So I'm not trying to guess what's going to happen. This is a big move. Much of this move has been related to a short squeeze. So let's take a look at the daily chart. Anyone who's been short, a lot of times institutional traders will be short at these major resistance levels where we have horizontal resistance that is wedged between the 200-day moving average and the 100-day moving average. When you blow through these levels, they have to cover their positions, and many of them would be short calls at that 575 level. Well, now they've got to reel those back in, and that's what fuels the rally higher. So we've got some of that going on right now. We have position adjustments going on. This is definitely a nice breakout right here. And that is what most traders often focus on. Oh, we've got the breakout. That's fantastic. And they only look at one side of the coin. So they imagine that this breakout is going to hold and that it's going to continue to rally. But what if you had a long red candle in here? What if almost all the gains from today were erased? Then how would you feel? Well, if I had a long red candle that closed at the 200-day moving average or below it, it would paint a completely different picture for me. I would be respecting, and I am still respecting, this big drop that we saw earlier in the year that tells me that there is big money that's looking to reduce risk. This was not some kind of mistake. And this long red candle closing below the 200-day moving average would tell me that the next leg lower is about to begin. And this was just the prelude. Now, this is the first big drop during a bull market rally. And what you're typically going to see is a big bounce because buyers have not been completely discouraged. They're still in their buying. So you've got this big bounce from the buy the dippers, and when it hits resistance, and it will get so high that eventually people that were bearish here and bearish here and bearish here start to capitulate. They start to believe in the rally, and they go, oh my gosh, this is legitimate. The market's going to rally to the all-time high, and it's going to take it out. So they were bearish here, and all of a sudden they start turning bullish. And now they start exiting their bearish positions and entering bullish positions. And when the market rolls over, they get twisted. And I believe that's what's going to happen. That's how I'm playing it. I feel that the bad news hasn't shown up yet. The tariffs weren't even enacted during Q1 earnings. Now they've been enacted. Now they're going to start having an impact. And that same inventory work-off that I'd mentioned earlier, that's going to be happening during the course of the summer. The Fed is still steadfast. They're keeping interest rates high. And they're not real flexible here. they're very hawkish. They see that inflation could be a problem, and they acknowledge that they are starting to see some weakness on the job front, but they're going to stand pat. Okay, so you don't have an accommodative Fed helping out here either. What gets Pete to change from bearish to at least neutral? Well, I would need to see a close above the 100-day moving average for at least a week. This little poke through has to be more than just a knee-jerk reaction to China's tariffs being lowered. And if the market can hold that level for a week, all right, fine. Now I will start getting into the bullish camp. Do I feel that I'm going to miss a lot of upside here if I'm not bullish today? No, absolutely not. Because big moves like this have to be digested. There is going to be selling pressure, and that has to be worked off. Buyers have to prove that they can overpower any kind of profit taking or any risk reduction right now. I don't know that that's going to happen, because if this breakout fails, then it's only going to confirm that the short side is the one that I want to be on. And this is where I'm going to start scaling into short positions, and I'm going to be adding on confirmation as the market continues to show weakness and as it falls through the 50-day moving average. I want those moves to happen quickly. I do not want them to unfold gradually, because gradual moves are not a sign of urgency. I need urgency. I need sellers to think, hey, this is the best chance that I'm going to have to short this market and to reduce risk in the next 5 months. And so I'm not going to wait around. I'm going to unload right now. And I'll unload tomorrow, and I'll unload next week, and I'll unload the week after that, because I don't like what I see in the long-term backdrop. So that's the mentality that I need to see play out in price. And if I don't see that, it tells me that sellers don't feel that sense of danger. They're not seeing this as the last chance to reduce risk at a really good price level. And that also tells me that, hey, you know what? Okay, buyers have some say in the matter here, and the market's able to support this level. That means that I tread very cautiously on thin ice if I do start trading from the long side. And again, I'm speaking primarily from a swing trading standpoint with all of this, because when you're day trading, you can do anything you want. I really don't care. I've been catching a lot of this move. I've been trading both sides. I exited a bullish Tesla position this morning. I took gains on a bearish J&J position. I'm still long MSTR. I'm looking to get out on that. I'm day trading BBY. I've got about a 50-cent gain in that. We've got a little pop right here in the stock. So let's take a look at what the market's doing. Get our bearings. We got the market popping up a little bit. So that little downward sloping trading channel and that gradual drift lower is still what I'm kind of looking to unfold here. Now, where does that set us up over the course of the next week or so? We've got to see how this move all plays out. And again, if that 100-day moving average holds for the next week or so, then I gradually start entertaining a balanced approach that's got more longs in it, longs and shorts, 50-50. And if the market continues to push higher, okay, now I'm going to have to ease off on my shorts too, because I'm wrong. I'm just technically wrong, and the market's not ready to roll over. It doesn't view what I see in China as a major threat. Now, one thing with regards to overseas issues is that I will tell you that in January and February of 2020, there was this pandemic thing going on in China, and the market was extremely resilient. It's like, yeah, what happens in China stays in China. And then when the hurt came in February of 2020, it came very quickly. It was like, oh my God, this is going to impact everyone. And then the market absolutely fell apart. That's kind of how these credit things unfold. In fact, we saw the same thing in 2007 and 2008, where you had festering credit issues and the market would sell off and then it would bounce. You get these big, tall bounces. Hey, we're still okay. Nothing happened. And then when push came to shove, the selling pressure started to accelerate dramatically into 2009. And that's when you had the really steep sell-off because we had a lot of bank failures. So these credit issues, they take a long time to manifest. And I'm hoping that I am very wrong on this. It could have a major impact. So until then, it's like predicting that the sun's going to explode. Well, if it does, we're all screwed anyway. And if it doesn't, then you look like a complete idiot trying to predict a credit crisis. So let's see what happens. Let's see how all this price action plays out. I personally feel that without any tariffs, the market would have been drifting lower in Q1. And so now that we have tariffs, I think that it is going to create some supply disruptions. I think that there's a lot of inventory that has to be worked off because everyone was trying to front run it. So that's the mindset that I'm in. I by no means feel that this rally in here is going to be my last opportunity to get long because stock valuations are still very, very rich and the Fed is still in tightening mode. So do I feel like this is the last chance I can buy here before we test the all-time high? Heck no. We're going to see some chopping around and this move's going to get digested. And if we reverse very sharply and very quickly, well, good that I didn't get long. Good that I didn't get lured in here because I'm going to be in cash and I'm going to be able to quickly respond to that failed breakout and I'll be short and I'll be adding to shorts and I'll be adding to shorts and I'll be adding to shorts on the way down when other people who have gotten long in here start bailing out of their positions. So that's kind of where I'm at, and I still see that as a viable possibility. And if the market does find support here and it starts grinding higher, okay, I'll participate. Be honest with you, it's probably going to be very, very short-term swing trades, very short-term day trades, because I'm still fearful of what I think is going to happen on a longer term basis. So I just wanted to give a little bit of clarity. The one thing that I'll also mention is that during this bounce, what do you see? Very light volume. And that can persist. So if the market does continue to climb, it's going to be on light volume. That tells me that there's not a lot of conviction behind the move. And who are the buyers right now? Been a lot of assets flowing into mutual funds, so a lot of it's retail. There have been a lot of stock buybacks by companies as well. So now that earnings season is behind us for the most part, those companies are through their blackout period and they're buying back shares. So that's also helping to fuel some of this rally. So let's see how high it goes. I'm going to be trading very cautiously above these major moving averages on a day trading basis. I can try longs, I can try shorts, I can do pretty much everything because I'm keeping my overnight risk exposure very, very low. And so right now I'm looking at Best Buy, you can see, and this is just a nice little technical lesson for me. For you, you can see this steady drop in BBY. That is relative weakness. That is a sign of persistent selling when the market is doing what? It's bouncing. It's all over the place. The stock shouldn't be selling off. It should be bouncing like this, just like the market's doing. Hey, look, there's a nice little rally in the market. BBY should be moving higher, right? No. Well, why isn't it? Because there's a seller out there who sees this pop as nothing more than a temporary blip, that consumers are not going to be loading up on electronic products from Best Buy just because we've got a better trade deal with China. That underlying weakness is still there. And so a long green candle like that is what I call a solo. They're just testing the ask. And you don't need to bail out at the first sign of trouble on a move like that. In fact, when it reverses very quickly, that is a sign of confirmation that you are on the right side and that the stock is going to continue to go lower. And this would even prompt me to add to the short position most of the time, because this little blip here was instantly smacked down. They played whack-a-mole with that thing. So we're going to take a look at this trade a little bit later today. I'm going to do a short video. It'll follow up on this particular trade, and you'll be able to see how it plays out. Kind of looking, depending on what the market does, I'd be happy with a $2 gain at 72.02. But if the market does roll over and we have this downward sloping trading channel and the stock starts to collapse and I start to see the selling pressure increase, I'm going to pull my bid. I'm going to keep trying to get the best price that I possibly can on it. So watch what happens today. Don't just immediately assume that, hey, everything's good in the trade world, everything's going to be great, and that the market is just going to absolutely take off. Valuations are high. Again, interest rates are relatively high, and we're not seeing any global growth. Europe, Japan, Korea, the US, everybody's floundering right now. And it's not because of the tariffs. This has been going on long before Trump even took office. And that should be your focus. The tariffs are just causing some very short-term volatility, and they're masking what's really happening on a longer-term basis. So don't lose that focus. Use price action as your guide. Always know that this rally has taken place on light volume, and that if we see a reversal back through these moving averages, that is a failed breakout, and that the selling pressure on the backside will accelerate over the course of the next 2 months or so. That's the move I'm really interested in. If I've got to buy through the course of the summer, it's going to be on a day trading basis only, and it's going to be a plug your nose and buy type of situation. I am not excited by what I see in the market from a technical or a fundamental standpoint. Deep breath, everybody. It's going to be all right. You're going to have clarity very, very soon. This is a major technical area. We've had a lot of news coming out. We're going to continue to get some trade deal news, and we're also going to hear about the budget that includes some tax cuts. That's actually going to be market-friendly news too. And so that's pending. That's going to be coming in the next 2 or 3 weeks. I believe those are the last of the bullish catalysts. And what I'd like to see is this lid stay on the market when we get those last few bullish announcements. And that's exactly what I told you about in the video yesterday, Sunday. Let's take a look at Tesla. That was the long that I highlighted. And what's Tesla done today? It's up nicely. In fact, it has followed through on that gap up. So Tesla, I like it, but now it's already up to the 100-day moving average. So I would not be buying it here with this kind of move in the market and with that overhead resistance looming right there. No trade. What about AFRM? What did that stock do on this major news? Oh, it's up a little bit. Okay, that's nice, but it didn't skyrocket. It's certainly not where it was pre-earnings announcement after the close Thursday. So it's been able to recapture the open of that long red candle. It's been able to recapture the 200-day moving average. Nice. Let's see what the 5-minute chart looks like. It's been able to float higher. So no, there's no short here. Well, when would there be a short, Pete? I need to know these things. Click GTC. Click on the low of today's candle, or you can set it at the 200-day moving average. I have it set at today's low. And if the low from today is breached, then I'm going to get an alert, and that will also be below the 200-day moving average. And that will tell me, hey, it might be time to consider AFRM as a short, particularly if the market is rolling over and selling off. Then that stock should gain a lot of downside momentum. That's how we're trading. I'll do a short video a little bit later today. Trade well, be patient. Let's see what happens today.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.